Thank you very much, Tom and Liz. And yes, I guess if Tom is actually paying for the event, he gets to use the extra 7 minutes or so when it comes up. So I guess I can't complain. I have a number of observations before I get into my presentation today. I mean, the first thing is I would not have picked In the Club as Tom's walk-up music. But now that I think about it, I'm kind of coming around. The second thing is I will now... 50 Cent, everybody knows that. Like, I will now pronounce the name Urbana from now on. It sounds way better, doesn't it? It really does. It reminds me of actually an interview that Kurt Cobain did in Vancouver, where he was giggling about the fact that people in Vancouver pronounce the band's name Nirvana, not Nirvana. So there you go. I like it. In any event, I'm deeply grateful to appear in front of the Urbana management team and shareholders and folks that are looking at the company again. Tom mentioned that Urbana has been a shareholder of the company for a very long time. Brendan corrected me. It is, in fact, 15 years that Urbana has been a shareholder of the company. Yes, indeed. And the support that was provided by the company, both in a material and otherwise, was absolutely essential in the success of the Canadian Securities Exchange. And although, as Tom said, we're certainly not going to disclose our financial results, as a private company and so on, that information is confidential. We're doing really well. I guess I'm okay. So again, it's always a pleasure to talk about the exchange business, and just to make sure that people don't make too many assumptions about what we do, I just take it back to some first principles. But the what I'm showing on the cover page here is absolutely essential to the recent success of the exchange and something that is really driving us forward over the next couple of years. That is actually a lithium mine in the Atacama Desert in Peru. This is the kind where they put water onto the brine that is at the base of some of the valleys. They sit back for about 2 or 3 years, wait for it to evaporate, and then mine the lithium-rich salts which are left behind. And of course, it is a key ingredient in the manufacture of efficient batteries for electric vehicles, power storage, and so on. Absolutely essential to the electrification of the economy that we've been talking about for the last certainly 2, 3, 4 years. Now, what does an exchange do? Well, fundamentally, what we're doing is pricing the risk, the value of capital that entrepreneurs are looking to raise from the market. And so we can do that better, and we've been passionate about delivering a higher level of service, which ultimately translates into a lower cost of capital for entrepreneurs which are raising money from Canadian investors. That's it. Now, how do we do this? Well, there are 3 main functions that we do as an exchange. The first one is we are regulators. So we vet companies that are being listed on the exchange to ensure that they meet all of our requirements, that they meet the requirements of the Securities Act, and that they are going to be responsible actors in the public markets. Because if we just listed anybody, that would actually do harm to the cost of capital. Because when companies are on the exchange, they have passed the requirements, they've vetted, they're subject to continuous disclosure requirements to ensure that information is available. They're publishing quarterly financials and annual audited statements. That contributes to a lower cost of capital, providing that regulatory footprint is not too heavy. The second thing we do is we make the information available, whether it's company fundamental data, how many shares outstanding, who's on the board of directors, what are they doing in terms of their past performance by way of share price, how many shares outstanding. All of this information that investors need to evaluate the company is available, as well as, of course, prices from the market as it happens over the course of the trading day. And so we very early made arrangements with the Reuters, the Bloombergs of the world to ensure that investors, whether they were in Canada, the United States, Europe, Asia, everywhere that people are trading Canadian stocks, had access to that information. and access at a reasonable cost. And last but certainly not least are the trading systems that we operate. We have to be really efficient in terms of the systems that we offer, that they are in sync with the technical capabilities of the broker-dealer community in Canada, that our protocols that we use can be easily integrated by folks in the United States and Europe and Asia and so on. And again, this is a science and an art to be able to make these systems available, to have them operate efficiently, to ensure that the price discovery process for these companies is the best possible way. And last but not least, we are in an intensely competitive market here in Canada. There are, at last check, 17 different books operated by, I think, 9 different recognized market operators that are currently pricing Canadian securities. We have listings that are being services provided by the Toronto Stock Exchange, the Venture Exchange, Cboe Canada, and us. There are rumors that maybe NASDAQ is going to add a listings function to their marketplace locally. So a very intensely competitive business. That's actually great for entrepreneurs because it makes us all better. Service levels will increase. There's price pressure. It's a phenomenal situation for entrepreneurs in Canada. In fact, it is literally, as a country, one of the very best things that we do. Now, how are we doing? Well, we talked a little bit about the financials. We were the world champions of new listings last year. Not just the Canadian champion or the North American champion. I stole this chart actually from the Australian Stock Exchange, who published their 5-year strategic plan in June this year. And they surveyed the world to see who had the most new listings in the year 2022. Surprisingly enough, they didn't include us in that chart, so I had to add us up to the top line there. But as you can see, we defeated our friends and colleagues across Adelaide Street by a nose last year. But when you think about it, again, remember I said getting companies into the public markets is one of the best things that Canada does. Look at that, 2 Canadian exchanges together absolutely crush the next set of exchanges in the world. And a lot of the companies that are listed, newly listed on the Japan Exchange, on NASDAQ, and so on, are actually ETFs, structured products, and so on. They're not real companies. Much higher percentage of real companies, obviously, from the CSE and from to a lesser extent, the TSX. So again, enormous opportunity for entrepreneurs in Canada being provided by the exchanges here in Canada. That's pretty cool. 20 years on and we're the world champions. So what is the outlook? I get asked all the time. They said, Richard, you've got visibility forward. What do you see towards the end of the year? Now, mining is really the activity that is driving the bus at the moment. To a lesser extent, we're still seeing a little bit of work in the cannabis and psychedelic space. Technology is always providing some new members to the organization. But again, the last couple of years, the story is really one that is driven by the mining concern. And typically in Canada, we have focused on precious metals companies. Now what we are seeing is significant levels of investment in copper, nickel, zinc, cobalt, graphite, lithium, and the rare earths. And those projects may be onshore in Canada, in the United States, in South America, literally anywhere in the world, but there is greater focus on properties that are located in Canada. And as you can see, compared with where we were over the last few years, really this is our forward look to the end of the year. We will have more mining companies list this year than ever before on the exchange. I don't think overall we're going to hit the 122 company number that we hit last year, but I'm confident that we will retain our world-leading status because conditions are tough across the board in a number of different non-mining related sectors. And that's true not just in Canada, but certainly around the developed economies in the world. But that said, we continue to see a new cohort of mining companies which continue to get funded and come to the Canadian Securities Exchange in preference to other markets located here in Canada. And again, the mining companies, what was it George called it, the eye chart chart? We'll certainly make this available for anybody who is interested following the presentation. But this breaks down by sector the companies who are already listed. So these are secondary raises of companies that are listed on the marketplace. As you can see, the overall number is down from those salad days of the pandemic in 2021. When it was largely U.S. cannabis companies, and particularly the large ones, were raising sizable quantities of capital, which drove us to that almost $8.6 billion record for the year. And of course, the reality of the mining space is that an early stage exploration company typically needs somewhere between $6 and $12 million to execute a phase 1 exploration program of a property. So even though the number of transactions are roughly the same over the last few years, the average deal size is considerably smaller. And as a result, the totals are not quite obviously where they have been over the last number of years. But as I say, the key thing here is that, again, mining continues to drive activity on the exchange, not just from a new listings perspective, but also trading, data, and so on. Now, from a Canadian perspective, again, to blow our own horn again, which is always fun because there were lots of years way back when that this picture wasn't quite so good. We continue to dominate new listings coming into the marketplace, and this is. We've edited this, I will concede, for real companies as opposed to CPCs, capital pools, which are popular on the venture exchange, as well as the SPACs, ETFs, and other financial products which list on the TSX. This is real companies. And as I say, on a year-to-date basis, we're operating at close to 60% of the new companies coming into the market. Now, the challenge that we have right now as a business and as a market operator is there has been, and I can think of no kinder way of describing this, a collapse in retail trading activity. So our marketplace, like other early stage capital markets around the world, is predominantly driven by retail trading. As Tom said, if you are an advisor with a bank firm, you're unlikely to, certainly in a high touch account, unlikely to be told or advised to purchase companies that are listed on the venture exchange, on the CSE, or CBOE Canada. So this is self-directed investors, usually trading through a discount broker that are directing the trades to the particular marketplaces. And I was interested to see, was there any kind of correlation between the increase in the consumer price index, increase in the overnight rate, and overall trading activity on the CSE. And I think I need to play with this chart a little bit to show the actual impact and basically engineer out all of that fun that we had in January of 2021. Again, those were the days I was working from my basement, and we were setting new volume records and on a virtually daily basis, and corporate finance was obviously extremely active. But what you'll see is the key figure here is the increase in the overnight rate from the Bank of Canada. Every time the bank rate goes up, retail activity drops. We are currently, and this is across Canada, about, I recall being in the United States, talking to some trading folks about 12 years ago. Canada was doing on average about 1 billion shares a day in turnover across all markets. The last few weeks, it's been about 875 million shares across all markets in Canada. So there are not many dynamic industries like the one that we are in that will see a retreat in a key business line back to levels that you saw 12 years ago. Like this is really nasty. But so if you want to ask me, Richard, what is going to change this? I don't know when it's going to happen, but I'll tell you what will make it happen, and that is commitment from the central bankers, particularly the U.S. Fed, to a softer interest rate policy So, and the tendency historically is not for that decline to be gradual, it tends to be quite sudden. And that will, in fact, generate a dramatic increase in activity in the junior capital markets. As I say, I don't know when that's going to happen, but that is the catalyst that will make the change. The other thing that will also drive this, and this is something I'm beginning to see discussed in the more popular business press at this point, and that is the challenge that the mining companies that are looking to meet the supply chain needs of the battery manufacturers are having in attracting trading and price appreciation as they report positive results from their exploration activity. Now, remember I said a lot of the activity now is in the copper, nickel, cobalt, zinc, graphite, lithium space. A lot of those properties were drilled 50, 60, 70 years ago by Noranda, Inco, and Falconbridge. They actually know there is a commercial ore body there. Now, for a bunch of reasons, they have to redo the drill, the technical reports, and so on. But the companies that have done their phase 1 exploration programs in 2020, 21, 22 have by and large reported extremely positive results. Normally, you would expect to see price appreciation and an increase in liquidity in the marketplace. We're seeing neither. That leaves the companies with a real dilemma. They've got to raise their next round of financing at a severely dilutive level for the existing shareholders, and it also makes it cost of capital because the liquidity just isn't there higher from folks who will participate in the follow-on rounds. So it's a genuine challenge for these companies. But at the same time, the governments are falling all over themselves to subsidize these battery plants. There's no supply chain for these companies. And so collectively, the CSE and our mining companies have been advocating with governments and policymakers around Canada in particular that we have to get our act together to speed up the permitting process to get these mines to production phase in considerably shorter time than you would expect under normal circumstances. There is some sense or a greater sense in Australia that this is a necessary policy step. And in fact, I will be in Australia next week for their equivalent of PDAC, the big mining show, and working with a number of CSE issuers who are looking to potentially raise capital in Australia, to speak to the local exchange and regulators about smoothing that process, and brokerage firms in Australia to enable Australian investors to trade more easily in Canada, which is a real challenge currently. But as I say, we need to get Canadians on board that this is a serious issue. And if we don't want to see an absolute explosion in the price of copper, nickel, and so on, we're going to have to get our act together in a real hurry. Cannabis, I see I've got 1 minute and 14 seconds left before I take questions. Obviously, there is a regulatory mess in the United States, but the overall trend is towards liberalization of the rules around adult recreational use, even at the federal level. And if the House of Representatives can ever manage to elect a speaker, there might actually be some legislative progress that make it life easier and more profitable for the cannabis issuers which are listed on the CSE. We've done a tremendous amount of work over the last couple of years with the regulators to create a senior tier. So we have regulations that are comparable to those of the big board in Canada, who shall remain nameless for the moment. And our securities are now also eligible for margin relief under the market regulators rules. That's deep inside baseball, but trust me, it is a tremendous move for cost of capital, especially when it's raised, when companies are raising money. I think there's going to be real progress on regulating finally short selling, particularly in the junior capital markets. And we will be looking at, we are implementing new pricing for all of our services, which will make us even better from a financial performance as we implement them into next year. And with that, I have made it by, oh no, I was over, sorry. Excuse me. But I do have a few minutes for questions, if anybody has any questions.
Hello. Thank you. Very interesting presentation. How many companies currently list with the Canadian Securities Exchange?
So my colleagues, Dimitri and Phil, are looking at me here, and he said, is he going to get it right? I think when I left the office last evening, it was 830. Oh, close enough, they said, yeah. Brendan.
Morning, Richard. Thank you for that presentation. We're going to have the data pricing sorted by January?
Yes. We got approval from BC 2 days ago.
That's fabulous. I didn't know that. I'm a director of the company. That's absolutely, that is monstrous. That's huge.
Yes,
So
for the other portfolio companies present, it's always good policy to under-promise and over-deliver. We're going to let you know, but yes, yeah, we did get approval from BC 2 days ago on the new data pricing.
Could you speak to the retention of companies? So of those that list, how many are remaining with the CSE?
So we did some work a few years back, and the lifespan is typically 6 to 7 years per issuer. Remember, there is a high mortality rate of these companies. The venture exchange and us really only expect to see 20% of the companies which list succeed in their current format. As you know, in many cases in Canada, people will use that public listing as a vehicle for something called a reverse takeover or a fundamental business change. So again, there is that. We are seeing some movement because I mentioned the marketplace is extremely competitive as between the venture exchange, the TSX, and CBOE Canada. There has been some movement amongst, so we're trying to steal companies from, if I can use that phraseology, from CBOE Canada, from the venture exchange, from the TSX, and they're likewise trying to do the same for us. Again, the entrepreneurs win because it ups all of our games. I would say since the changes at the board level at the TMX group, they are paying more attention to the local knitting, and they are as formidable a competitor as they've been since I've been CEO. So that's something that we're certainly paying a lot of attention to. But that said, we have developed a tremendous reputation with the investment bankers, with the accountants, with the lawyers in Toronto over the last several years as being the exchange of choice, particularly, admittedly, for smaller companies to take their clients public. And so that's really the key piece of our competitive advantage is that service proposition.
Super. To Brendan's point, could you just speak to the data monetization and how that's going to diversify your revenues?
Well, as an exchange operator, you would like to have the three legs of the tripod be within shouting distance of each other. So whether it comes down as a third, that would be ideal. But again, with the explosion of trading activity during the pandemic, trading was the longest leg of the stool, if you will. But data has always been an important part of our revenue model, and we had an opportunity now to adjust that model to increase the revenues that we receive from that from that area. There was a time early in the exchange's experience when data was about 65% of the revenue, as we were building up the trading and the listings businesses.
Could you speak to relationships with other portfolio companies within Urbana?
Well, the bio indicates that I am on the board of Blue Ocean, which is a very exciting opportunity. And in fact, that opportunity came to Urbana as a result of some connections that I brought to the table. Tetra Trust, which is also in the Urbana portfolio, is another opportunity that we've collectively invested in, and I'm sitting on the board. So there are other opportunities that arise from time to time, but those are the two. that certainly are key for us. We look to leverage the blue ocean story is, as Tom says, really, really interesting. And one of the challenges that we have is, again, I talked about early stage capital being one of the best things that Canada does. So we have lots of entrepreneurs in Singapore, in Hong Kong, in Korea, in Japan, in Australia that would love to take advantage, but the difficulty they have is the local investors have a really hard time trading into Canada, right? So again, the company comes in, they've got friends and family and founding investors and so on, but if they're located in Singapore, for example, it's a real challenge to get that trade into Canada. Blue Ocean actually provides the pipeline to get trades into North America. And I'm working with the Blue Ocean team, John, to think about adding, and again, this is kind of inside baseball, but all of our companies also trade over the counter in the United States. And Blue Ocean, if they were to add some of the over the counter names to their security master list, that would be the easiest way for Asian investors to trade. So the actual trade would be executed in the US. I don't care particularly because the company sees the liquidity and gives the local investors the opportunity to trade the stock. For us, it's obviously an opportunity to extend our listings business development to some really exciting markets that are underserved, particularly in the early stage capital space. Because to get listed on any one of those exchanges in Singapore, Hong Kong, Korea, Japan, so on, typically the rule is you have to have 5 uninterrupted years of profitability before the company is considered eligible for listing on the exchange. Well, you can imagine the accounting tricks that companies have to employ in order to do that. And so what it tends to do is it saddles the companies with a really crappy balance sheet, to put it mildly, when they go public. So we would prefer, as I say, to see these companies or give them the opportunity to go public a little bit early without having to tie themselves into knots from a capital perspective to secure that listing. And as I say, there's a lot of interest from the entrepreneurs to do that.
Fund Through at the last AGM made an interesting comment as to what unit holders could do to help them. It was about human capital and directing business to them. What could unit holders of Urbana do to make the CSE's life better?
Well, you can certainly talk us up in any circle that you travel in as an opportunity for private companies to secure capital. Again, keep us in mind, when somebody's loudly explaining that the venture exchange is the only game in town, that in fact there is a incredibly competitive, viable, successful marketplace in Canada that is outside of the 178-year-old incumbent, or however old they are this week.
Last question, just on the CBOE Canada, looked like it was interested in acquiring someone with clearing. You had a clearing initiative a couple of years back, and just wondering if you could give us an update on that. Thank you.
Yeah, we investigated and did a tremendous amount of work with the regulators, and the notion was that we would provide an alternative clearing mechanism for digital securities. We were going to get, I think, a lot of help from the regulators in terms of the capital required to get that facility off of the ground, until Sam Bankman-Fried stole $9 billion from his unit holders, and any appetite regulators had for taking on risk associated with digital assets evaporated. And so we would have had to somehow raise in the vicinity of $100 million to backstop a facility to clear and settle digital securities. And with all of the other opportunities ahead of us, like market data, like continued growth of our listings business and some changes we've made to the pricing on the trading side, we felt that our time, energy, and investment dollars were better focused on those areas. That said, we learned a lot, and if the environment changes, we are positioned to take advantage of those opportunities. And as always, we will list digital securities because they're securities. So that's, we're in that game completely. Well, I see I've run out of time. Thank you very kindly. I will be around for the day and look forward to meeting many of you and having a nice chat. Thank you.